Hello, hello, hello. This is Helen Thomas and the CDFM study group. Welcome. All right, the purpose of the CDFM study group today is to complete review of CDFM Module 3, which is Accounting and Finance. All right, so today is our last overall review of the Module 3 information. So welcome, just come on in and join us. So we have already started the recording, so I'm just beginning the review of CDFM Module 3 to ensure that you've captured all the key points that I've given you throughout the last 3 or 4 weeks. We've been going through the material. Again, on the CDFM exams, the exams will not be broken down by competency area. So they're not going to say, all right, you're in competency 1, fiscal law, you're in finance, accounting, and so forth. So based on the scenario or the information that's in the question, you will have to answer those questions. So that's why it's important for you to know the test breakdown on our study plan in the file section of the Teams group. And I've also put it on the Facebook page on the file section is our 2024 plan. I also show the percentages of each section that will be on the exam. Fiscal law accounts for the majority of the questions on all 3 of the exams. Now, when you study for Module 3, once you've completed everything in Module 3, the next step is you need to go into Module 1 and Module 2, looking for similar topics that's in Module 3. The reason I advise you to do that is because sometimes there's more information in another section that helps you to better understand the information in the module that you're studying. So you always want to review the other 2 modules. Don't just tunnel vision on that one module. All right, for the individual that's online, can you hear me? Because I want to make sure it's being recorded and I want to make sure that you can hear me clearly.
Yes, I can.
Okay, thank you, ma'am. All right, so you think you're about ready, Miss Clark, for the exams? Because usually what I do with the study review part of it is I kind of ask questions, throw it out there. I'll pause for a little bit, give you an opportunity to respond. And then before I give you the answer, because at this stage, if you've gone through the entire study guide, at least multiple times, you've looked through Module 1, Module 2, then you should be, some of these questions that I asked, you should be able to just rattle off the responses.
Probably halfway. Halfway.
Halfway? Okay.
Yeah.
And a lot of it is repetition. I tell people just because I skip through different parts of the study guide, when you're studying, you're reviewing all of it, but you're not going to remember all of it. So you have to focus on the key points. So that's where I come in to try to help you to zoom in on what those key pointers are so that you can remember the information when you see it again. All right, so as I'm going through, if you see somebody come in the lobby and they want to get into the study group, feel free to accept and invite them in. All right, so we know that Congress has the power of the purse. They control the money. How do they apply those control? Other than when they vote on the budget, they also control it during the execution phase by utilizing those rules established in fiscal law, the do's and the don'ts, what you can and cannot do with the appropriations, what's the time limit, what's the purpose of those appropriations. All of those are what gives Congress the total power of the purse. And so fiscal law is required by financial managers, because again, if you're the one, the dispersing officer, you're the certifying officer, it doesn't matter what that commanding general said or that supervisor. If you're the one executing, then you need to know the do's and don'ts of those appropriations. All right, so I'm going to be looking at different aspects. So Article 1, Section 7, what does it talk about?
Raise revenue.
All right, so Congress can raise revenue, and what else can it says in section 7? So raising revenue is not the only thing that's in Article 1, Section 7. The other thing that's in there, it talks about how the process of how a bill gets moved through the Congress and goes to the president for the president to sign or veto. That entire process is also covered under Article 1, Section 7. So what I don't want you to do is think that just because they only put 1 or 2 sentences in the study guide, and that's all that's covered under them. So I'm going to go kind of in order, and then I'm going to just randomly ask questions off of the different notes that I have. So if you have questions while we're going through and something's not clear, then you need to stop me and ask. Again, this session is being recorded, so keep that in mind. All right, so Article 1 is talking to which branch of government? I'm going to start off easy.
Legislative, Congress.
Legislative or Congress. Article 2 is the executive branch. Article 3, even though it's not directly in Module 3, again, the information you learn in Module 1 still carries over. So you can't dump anything from the other modules. All right. So we're talking fiscal law. We're talking the use of the appropriations. What is the GAO regulation that governs the appropriations use? The power of the purse. What is the GAO regulation that tells us what we can do with the appropriations? So what did I say? What are the key words in my question?
GAO use.
GAO.
Is that the red book?
That's the red
Appropriation
book.
law.
So when you're taking the exam, that's what you're looking. What are those key words to tell me where do I need to zoom in? So once they say GAO, you only learned a few, the GAO red, yellow, and green book. What else we learned from? I think that's about it, right? So appropriations law is the GAO red book. Because again, fiscal law is what you can and cannot do with the appropriations. So you need to know that the GAO red book is the most authoritative source, because it comes from GAO works for Congress, and Congress is the one that guides what we can do with the appropriation. What is the law that developed the GAO and the OMB? What is the law that established the GAO, the OMB, and it also required the president to submit the budget to Congress no later than the first Monday in February? There was three things.
1921 Budget and Accounting Act.
The 19, that's correct. 1921 Budget and Accounting Act. It's important enough because it's got 3 things that we talk about consistently in the study guides. So 1921 Budget and Accounting Act. So just like you have the GAO Red Book, so after GAO works for Congress, who is the resource manager or CFO for the executive branch?
The Commander-in-Chief. President.
Who is the resource manager or chief financial officer or what else? What they call them? DRM. There's different names, but who is the chief financial officer for the executive branch?
Is that the Undersecretary of Defense Comptroller?
At the executive branch?
Oh, executive branch, no.
So you got to think, what level are you? So the executive branch, who's under the executive branch? What's the other title? That's the president, correct? Can we agree that the executive branch is run by the president?
Yes.
All right, so who's a resource manager for the president? You know it. Stop thinking so hard. Y'all know it. And who is it?
Is that Comptroller General?
Nope. That is OMB. Remember OMB? Office of Management and Budget.
Yes.
They're the senior resource manager or chief financial officer for the executive branch, for the president. So Congress has a congressional budget office and they have GAO. The executive branch, the president, has Office of Management and Budget. The DOD, anytime you say Undersecretary of Defense, you are at the DOD level. So that's how you know you can differentiate the differences. Undersecretary of Personnel, that's at the DOD level. So you got to be able to differentiate those. So OMB also gives us guidance on the formulation of the budget, appropriations use. What is the OMB directive or guidance or policy dealing with fiscal law? And whenever you, go ahead, Gerardo.
OMB Alpha 11.
Okay, OMB Circular A11, that's correct. So any guidance that we receive from OMB, it's typically in an OMB circular. So that's how you kind of differentiate. You got the GAO appropriations law, that's the red book. The GAO auditing, that's the yellow book. The GAO internal control, that's the green book. OMB Circular A11 deals with the use of the appropriation, the budget, the formulation, the president submitting the budget, and so forth. Do y'all understand what you have to do? You got to be able to separate the puzzle. All those key players, you got to be able to put them where they go. So anytime I say the executive branch, don't say GAO, because GAO is not up under the executive branch or next to the executive branch. They work for Congress. Everybody understand that? As these are simple questions that I'm asking. So I need y'all to get that ground rule out of the way. All right. So so we always talk about Anti-Deficiency Act. We said fiscal law talks about purpose, time, and amount. Every appropriation has a specific purpose, specific timeline, and when you can enter into new contracts and amount. What is the Anti-Deficiency Act regulation that deals with purpose? And Anti-Deficiency Act always starts off with 31 U.S. Code. So I give you a hint.
Is it 1301?
Okay, so 1301 is purpose. So anytime it's Anti-Deficiency Act, that gives you your 31 U.S. Code. Purpose is 1301. Time is 1502. Amount is 1341, 1342, and 1517. So now you need to know in the amount, what's the difference between 1341 and 1517? That's 31 U.S. Code. What is the difference? Because you got three of them. We know that 1342 deals with what?
Voluntary services.
Voluntary services. So what is the difference then between 1341 and 1517?
1341 is for the excess of appropriation money that's used, violations for that. And then 1517 is excess of apportionment.
Apportionment, there you go. So that's the two difference. One is exceeding or spending in advance of appropriation. That's 1341. 1342 deals with voluntary services. Can I accept voluntary services? Can the federal government accept voluntary services? And if so, how? So think about it, because the exam is not going to be word for word. It's not going to be direct. Because again, it's a certification, so they can't make it too easy for you. What are your thoughts? Can the
If I remember correctly, if that agency like sets the payment down to 0, and then if it's like something that has like Red Cross or like Candy Stripers or something to that nature.
Perfect. You're in the right neighborhood. So the bottom line is, so those particular ones you name, they already have the statutory authority. That's the bottom line. That means there's a law already out there that says, yes, you can have volunteers from Candy Stripers, museum workers. Typically, you cannot accept voluntary services if it's for a job that's by law is a paid position. If it's typically a GS-12 position and someone says, you know what, hey, I used to be a budget analyst, you know, I just PCS here, I just came into the area. I'm not really looking for a job right now, but I want to keep my skills up. I can help you out, you know, one hand washes the other. You cannot accept the voluntary services for a position that is paid. Going back to what you said with the lowering the pay to 0, only if you have that authority to do so. That means in that mission of that organization, it says you have the right or you have the authority to lower the pay to 0, then yes, you can accept. Otherwise, that organization, that group must already have the statutory authority to accept voluntary services. Any question on anything I just stated? All right, what are the 2 types of certifiers? And what are the differences? A 2-part question. What are the 2 types of certifiers? Come on, y'all are slow on the draw. Come on. Fiduciary and
Pecuniary.
pecuniary certified. Those are the 2 types of certified. They can certify funds. What is the difference between fiduciary certifier and pecuniary certifier? What are they certifying? The fiduciary certifying what? The best way to remember, fiduciary starts with an F. They are certifying the right fund. Fund starts with an F. Fiduciary certifier, they're certifying the right fund. You're using the right appropriation. Is this an O&M requirement? Is this a MILCON requirement, military construction? And you're using, yep, you're good. That's what you're certifying. Fiduciary certifies the fund. Pecuniary is certifying the payment. That's a P, pecuniary, P, payment. Pecuniary certifier is certifying the payment. All right, it says that you're supposed to be, based on the documents, you're authorized $10. I'm certifying, yes, disbursement of $10. That's the easiest way to remember. Certifying the fund, fiduciary, certifying the payment, pecuniary. Does that make that a little bit easier for you guys? So now you know the 2 types of certified. Is that a little bit easier?
Yes. Yes.
Yes.
Okay. All right, we did that. Talked about some. What is the DOD's #1 no-year appropriation? Or X fund appropriation, because if a no year has an X fund.
Defense,
Working
different way.
capital fund.
defense
The
working capital,
right?
capital fund.
Yes, ma'am. Yes, sir. Defense Working Capital Fund. And the goal of the working capital is
Break even.
break even. So that is the difference from the commercial side. Commercial side wants to earn a profit. So that's how they dictate how much they're going to charge. On the government side, it's to break even. So again, if you watch the prices at the commissary. 1 year, prices might be up here for, I'm thinking about ribs, so it must be lunchtime. A rack of ribs, and then you go back the next year, it's like, whoa, those ribs are cheap. That should also tell you that they've consistently been earning a profit, so they have to lower the price the following year. I think they usually post their price annually, so they usually keep it around the same cost each year. So that's the difference, working capital fund. Under the purpose statute, 31 U.S. Code 1301, when you're trying to figure out the right purpose of an appropriation, you have to apply the necessary expense doctrine. What is the three-part test that you take for that necessary expense rule? When you're trying to figure out which appropriation you need to use for that requirement. It's a three-part test that you have to go through. What are the three things? Number one, I'll give you the first one. Does the expenditure, whatever you're trying to buy, does it bear a logical relationship to the type of appropriation you're trying to use? So think again, you're under purpose. Does the expenditure bear a logical relationship? Am I want to do a construction project? Yes. Is it bear a logical relationship to me using military construction dollars? Yes. Okay, check. That's the right purpose. Is the expenditure prohibited by law? Did Congress say you cannot spend any appropriated funds on construction of this particular facility? Is it prohibited by law? And the third thing, is it provided for elsewhere? Is that expenditure already provided in the NSN that supplies them, and you trying to do a contract? Purpose, you're trying to come up with the right purpose. Logical relationship, is it prohibited by law? And is it provided for in somewhere else? So you don't have to enter into a new contract. Under the time statute of 31 U.S. Code 1502, that's, what is it, chapter 15, paragraph 02, you have to apply the bona fide needs rule. Timeline, you have to look at when do you need that requirement. So you have to look at crossing fiscal year. Does it matter? Does it not matter? So when you do that, you look at whether the requirement is a severable service or a non-severable service. What does it mean if something is a severable service?
It's routine in nature, and it's within the 12-month time frame. So basically, most annual appropriations apply to the severable contract service.
Okay, so then what's the difference between a severable and a non-severable then?
Non-severable is like more project-based or cross fiscal years or multiple years. So non-severable, you have to be paid up front, but then the project has to be completed to the end.
Okay, so when it comes to obligation, because again, think of it as a budget, as a financial manager, everything boils down to the money. When do you obligate a severable contract? Because let's say the severable contract starts in September. The period of performance starts in September. I have a severable contract. Can I obligate current funds for that contract? What are the rules?
You can obligate for no more than 12 months.
Okay, so what you're saying, if I have a severable service, that's like a cleaning service, a maintenance, housekeeping, that's a service that I can break up, and everything before that, I still receive a benefit. So if I have a severable contract that starts in September and it runs for 12 months, yes, you can obligate current funds up to 12 months, even if it crosses the fiscal year. Let's say the severable service is for 13 months. Do I obligate the full 13 months? Are there any limitations?
You go for the initial 12 and the additional months, it's subject to availability of funds.
Okay, outstanding. So severable service, if it's 13-month contract, if you read in the question and it says, okay, this is a severable service, or they might not even say severable. They might say this is a cleaning contract for, it's a 13-month cleaning contract. How much will you obligate in current year? You will obligate up to 12 months. That's your limit. So for all of it, all your severable service. And then the additional month will be subject to availability. Non-severable, if you want to tie an example to non-severable, tie your training. You got to complete all the training, so you pay for the entire training. If you're repairing a building, you have to repair the whole building, or you have to complete the whole job to get a benefit. You can't just do bits and pieces of it if the whole thing is an issue. So the whole job has to be completed. So the reason I'm listing the examples, because they may not say this is a severable or this is a non-severable. If I'm upholding what they said, overhaul of a ship, you could think about it. A ship is not going to be fixed in 12 months, right? I don't think so. I don't know much about ship, but they're huge. They probably take a lot of time, but what they're saying, overhaul of a ship that takes 2 or more years, or development of a software, will result in a definite end product. But to overhaul a ship, if I'm upgrading, fixing the ship, I got to do the whole ship. So that's a non-severable. So also looking at those examples. Can I use, this for you, Mr. Gerardo, can I use O&M funds to do a construction project? And if so, what are my limitations?
Yes, you can.
Okay, what's my limitation?
And you can go minor construction up to 2 million and a purchase up to 250K.
Okay, and purchase of items with investment. The word investment tells you that they're talking about procurement dollars, or it could even be Milcom. So purchase, that means you can use O&M dollars, something that you may normally have to get OPA dollars or procurement dollars. If it's 250,000 or less, well, not more than 250. So less than 250,000, then you can use your O&M dollars to make that purchase. All right, so what are my annual appropriations? I have multiple annual appropriations. What are they?
MILPER and O&M.
MILPERs and O&M. Paying my military folks, PCS, whatever they need to go, their pay, their meals, their housing, and O&M. Those are annual. That means that they're only good for new contracts, new obligations annually. All your annual appropriations are expense type. In case the word expense type is used, tie it to an annual appropriation. You only know of 2, MILPERs and O&M. That's how you look for those keywords to figure out what the question is asking you about. Which expense type appropriation can be used for military construction, minor military construction project? O&M. RDT&E is good for 2 years to enter into new contracts. Procurement is 3 years. Shipbuilding, conversion, Navy, and military construction are 5-year appropriations. Remember that shipbuilding, conversion, Navy is a procurement. It's all 3 of those. Procurement, SCN, and Milcon are all investment type. So they're funded incrementally. As you need the money the next year, you don't get all the money up front for a Milcom project. No, it's incrementally as the stages go. All right, we talked about the Defense Working Capital Fund. That's the DoD's #1 no-year appropriation. When can a working capital fund be closed? What are the scenarios?
When it has fulfilled its purpose and the president or the agency head determines that, and then and it also includes no disbursement for 2 consecutive years.
All right, so the president or the agency head says we no longer need that service, or there's no disbursement. They haven't been buying anything, they haven't been paying out anything. So no disbursement for 2 years. Those are the scenarios that can close a working capital fund. Otherwise, the working capital fund is revolving. It's always in action. They take their money, buy the product, put the product on the shelf based on what it costs them to do it. They charge the customer a price. Customer comes in, buy the item, it's revolving. That money is put back in. So it works the same thing as the civilian side, as we stated earlier. The only difference is the civilian side is trying to make a profit, so they're going to keep raising their price, and the government sides have to fluctuate that revolving fund. Appropriation life cycle. Every appropriation stays in the expired state for how long? 1, 2, 3, 4, 5 years. Every appropriations, they stay in the current. We went over the annual, we went over the RDT&E is 2 years, procurement is 3, SDN and Milcon is 5. Then after those timelines are up, they enter into the expired state. Every appropriation stays in the expired state for an additional 5 years. The difference between current and expired, in current, I can enter into new contracts. Expired, I can only make adjustment to a contract that was already established when the account was current. And then after the 5th year, then that account becomes canceled or closed. If an account is closed and I receive an invoice, can I pay that invoice on that closed account? And if so, with what money?
No,
Cancel. Go ahead. Go ahead.
you can't pay it.
You said no. Okay, I got one no. I can't pay it. Or can I pay it with an exception? What am I paying it out of?
Yes, you can pay it with the exception. You paying it out of current year funds, 1%.
Okay, so you can use, if you have a current appropriation, the same type as the one that's canceled. Let's say last year we closed FY18. Let's say you get an FY18 bill today and you're like, oh, that's only $200. You don't have canceled account anymore because 18 is gone, went somewhere, but you don't have it anymore. You can use the 1% rule. And I think someone asked the question, is that 1% rule only apply to DoD level? Anything that applies at the DoD level, just like the Anti-Deficiency Act, it trickles down to us. So it applies to us also. So that 1% says I can use current appropriation up to 1% of the same type of color to pay that bill. So once the FY18 that we closed last year is gone, now we're 1 October and it's gone, where does it go? That money just poof, evaporates. Where does the accountability of those funds move to?
Back to the treasury.
Back to the treasury. In which account?
Miscellaneous receipt.
Miscellaneous receipts account. So pretty much anything that goes back to the treasury goes in that miscellaneous receipts account. So if you'd be like the treasury, miscellaneous receipt, like if most of you should be familiar with the military soldiers, they have TA-50 gear, that's the helmet, all that stuff. If they lose something and they go into the finance office with a cash collection voucher to pay for that item, that money does not go back to that organization. That money goes in the miscellaneous receipts account. So that's why when they lose a gear, you see that it comes off the property book because you're not going to get that money back. Soldier comes in and pays for the item, the money goes back to the treasury. So you kind of lose out. So you don't really want folks to lose their gear. All right, what are the different types of budget authority? But before you give me the types, what does budget authority mean? What does budget authority mean? We're throwing around some terms here. Let's make sure we know what they mean.
Staying within the funding limits.
Right? So that means you have funding limits. Before you can spend any money, you have guidelines. So your budget authority is your limit, your fence, your whatever, your restrictions that you have and how much you can spend. And so for each one in the appropriations, in the contract, like the KO, they have a limit of how many contracts they can write, up to how much amount. So what are the different types of budget authority? Give me one, give me a few.
Appropriations,
Appropriations, okay?
contract authority, borrowing authority, offsetting collections and receipts, loan and loan guarantee authority.
Okay, and in the older study guide, there was another one. Did anyone catch it when I went through that section?
Monetary credits.
Monetary credits. Make sure you write that down. And I say that because I think they forgot it in the book, because if you read on page 3129, it states there are 6 forms of budget authority, but they only listed 5. So that tells me they forgot to put that 5th one, the 6th one. So the 6th one is monetary credits. So just remember, everything you do with funding, you have to have the authority to do so. So you either get the authority through the use of the appropriations, contract, loans, borrow, and so forth. So there's 6 budget authority types of budget authority. What does the term outlay mean? Outlay, what is outlay?
So disbursement.
Outlay is the same thing as disbursement. What is the formal definition? Whenever the funding is removed from the treasury to liquidate an obligation. That's the formal definition in my words, but that's what it is. So it is a disbursement, but you may not see the word disbursement. So the long as funding is coming out of the treasury to pay a contract, it's liquidating our obligation, that's an outlay. What is the Feed and Forage Act, 41 U.S. Code? What does it talk about? Why is it important to the DOD? Feed and Forage Act. Because all of the purpose, time, and amount, you say, I can't spend no more than what I have. I can't spend before I get any money. So then why do we need the Feed and Forage Act? What does the Feed and Forage Act do for the Department of Defense?
Authorize obligations in excess of the appropriation.
Okay, so in an instance where The Department of Defense deems that, okay, we don't have the appropriation, but we're deployed somewhere. We need food. We need the right clothing. We need fuel, medical care. If the Department of Defense deems that those things are needed and they don't have it in their budget, under the Feed and Forage Act, it gives them that exception to policy, which means you got to have that cost tracker, the functional cost accounts, where you keep track of what's associated with that mission. You're keeping track because under the Feed and Forage Act, it okays the Department of Defense to spend in excess of what they have available in that appropriation. The Department of Defense is the only agency that's authorized to use the Feed and Forage Act. All right, so we did that. All right, once Congress appropriates the funds, two things happen. What are those two things? Once Congress appropriates, the Treasury issues the Treasury warrant. That's the legal part that's tied to the law that says you have to have an appropriation law to open the bank account. So the Treasury opens the bank account with the Treasury warrant, and OMB begins the apportionment process. Now, does OMB in the apportionment process automatically sends funding to the agencies? How does the apportionment process look? What's the process?
Does the agency submit the SF 132
Okay.
within 10 days? And then OMB has 30 days to provide the allotment.
Perfect. That's it. So the drive is once the appropriation law, Congress has appropriated, the president signed it, we have an appropriation. The next thing, Treasury issued the Treasury warrant, or it's sometimes called the appropriation warrant. And then OMB begins the apportionment process by collecting the SF 132s from the agencies. The agencies have to then say, okay, well, Congress approved $2 million for defense. Here's my SF 132 requesting my $2 million. And OMB might say, okay, I'm not going to give you all two. I'm going to give you one, or however they work it out. And then the apportionment goes down to Department of Defense and the other departments. Then what does Department of Defense provide? How do we get our funding? What is it called when it's trickled down under the defense? We got appropriation, apportionment. What's the next level down under apportionment?
Allotment.
Allotment. So Congress appropriates, OMB apportions within that 30 days. The agencies, once they get their apportionments, then they issue allotments to all their subordinates. And then we all commit, obligate, and outlay the funds. Y'all see how that works? So think about it in that sense. Any question? What are the 4 functions of finance?
Entitlements,
Go ahead.
entitlements, payments, collections, and control of funds.
Okay, so if you want to think about it in this sense, finance, you got the resource management side or the budget side, then you got the finance. We pay people. Entitling, the entitling part is the finance folks determining, okay, well, you said your authorized housing allowance, where's your marriage certificate? Are you entitled to housing allowance? So entitlement comes first. Then if you are entitled, then we're going to pay you. So that's your payment. And sometimes you might get overpaid and we have to collect the money back, collection. And then if everything is in line, I have to control the funds in and out, accountability of the funds, control of public funds. Pay, entitling, pay, collect, and control funds. What is the DOD's agency that's in charge of the finance and accounting function? Because the section you're in, module 3, is accounting and finance. So what is the DOD agency responsible for the accounting and finance function? Because there's a sub-organization under each of the functions under the DOD.
DFAS.
DFAS, Defense Finance and Accounting. So DFAS is the primary DOD. So remember, your Secretary of Defense is not in charge. So he must have an agency or somebody that's under him that is responsible for finance and accounting. Is DFAS. What is the DOD regulation that governs finance? What is the DOD regulation that you can go to and it talks about finance and accounting?
It's the DOD 7000.14 Financial Management Regulation, FMR.
Yes, ma'am, that's correct. All right. What are the different types of accountable individuals? That was somewhere in there. What are different types of accountable individuals? And I don't remember which section that was in. I think it was departmental accountable. Then you got dispersing officer.
Certifying.
Go ahead.
Certifying officer
Mm-hmm. And
disbursing officer.
dispersing officer. So those are different types of accountable individuals. What are, let me see, and I think this is number 2. What are different ways to disperse government funds? See, thinking it, let me find it. Different ways to disperse government funds.
Electronic funds transfer,
Okay,
Tre-
everybody should
treasury
get that
check,
one.
large
EFT.
disbursements,
Okay, what was the other ones?
treasury check, large disbursements,
Right.
dispersing and payment system, and miscellaneous payments.
So with these, try to apply it to yourself, because if you've been around the government, you've gotten a check. Most everything now is EFT, electronic funds, but there's some instances where you get a check. Like when I go to my VA appointments, I put in my travel. If I have to, actually, if I go, I get my $12. If I got to go down the road to the VA, you know, I put in to get a treasury check. So different ways in which you can be receive payment from the government. So at least know, because you're multiple choice, so at least know 3 of them, because usually have to differentiate which one is not or which one is a way to disperse government funds. In finance, you have record keeping. How long are civilian pay records kept? Civilian pay records. Actually, that's my age. My current
Is it
age.
56?
56, yes. Telling my age, that's my age, 56 years. So just ask yourself, how old is Miss Helen again? She's 56. So civilian pay records are kept for 56 years. What is, because a lot of us go TDY, temporary duty travel. So what is the travel voucher number? Because again, before DTS, we used to actually have to use the paper document. So what is the travel voucher number? That's the DD form 1351-2. Whenever you sell your voucher, if you go to print it, you'll see the number at the bottom. 1351-2. What does, because under finance, it talked about Prompt Payment Act. What does prompt payment mean? If you had to put it in your own words. What does prompt payment mean? It means exactly what it says. Pay your bills. Go
Yeah,
ahead.
basically pay the obligations on time or pay interest.
Okay, so it's just like us when you get a bill. Prompt Payment Act says you pay the bill before it's past due. Because what happens when your bill gets past due? They start charging you interest, right? Or whatever else, late fee, whatever they may call it, they're going to charge you something more than you would have paid if you paid it early. So you have a timeline. The key with the prompt payment, I don't think anyone have come back and said they had to actually calculate the payment due date like it is in the book. However, there's a part in there where it says, like, what if you see in a contract 310 net 30? What does that mean? Does anyone know what that means? If in a contract and you see the terms of the contract says 310 net NET 30, what does that mean?
If you pay within 3 days, you get a
And how many days?
You said 310.
Mm-hmm.
So within 3 days, 10%.
Not exactly. Any other takers? 310 net 30.
If they pay early within 10 days, they get a 3% discount. If they don't pay with after the 10 days, then they pay the regular amount.
That's exactly what it is. So the 3 over the 10 means you can take a 3% discount if you pay the bill within 10 days. If not, you pay the full amount within 30 days. So again, so whether it's 210 net 30, 2% discount if the bill is paid in 10 days. So they put that little incentive in the contract because they want their money. The contractor, the vendor wants their money as quickly as possible instead of the government waiting 30 days. Sometimes we wait 35 days. Yeah, we're going to pay them a little interest, but they didn't get their money up front. Versus if you want a discount, I'll give you a 2%, 3%, 4% discount if you can pay this bill off in 10 days. If not, you pay the full amount of what you are due by net in 30 days. What does DSSN stand for? So first of all, what's the acronym stand for before we say what it means?
What is the acronym again?
DSSN.
Disbursement station symbol number?
That's correct. Dispersing station symbol number. And what does it mean? What does that dispersing station symbol number mean? When you see that DSSN 0359, DSSN 1234, what does that mean? What is it telling you?
Identify the office where the disbursement is coming from.
Right? So he identifies the finance office that's making that payment. So whether it's DFAST, Indy, DFAST, the Cleveland, or wherever, like when we deploy, we use DSSN, or is it in a deploy location? So whatever that DSSN number tells you which finance office is responsible for that payment. Do y'all have any question of me so far? We took that. What are the 3 types of accounting, federal accounting? Three types of accounting.
Budgetary, proprietary, and is it cost account?
Managerial.
Yeah, managerial.
Managerial cost accounting. So the CCV is. So budgetary, proprietary / financial, and managerial cost accounting. What is the formula for the budgetary accounting? What is the formula? So it's resources, budgetary resources equal the status of those resources. What is the formula for the balance sheet? Because again, it's not going to be given to you on the exam. You have to know it. What is the formula for the balance sheet?
Is it assets equals liabilities plus net cost?
Okay, net position or net cost.
Position. Okay.
Yes. So assets equal liability plus net position or net cost. In reference to the ledger, then what numbers tells you that it's an asset, that it's a liability, that is a net cost or net position? What would be the trigger on a ledger? Go ahead, Ms. Knight.
1,000 is assets, 2,000 is liabilities, 3,000 is net.
Net position. Okay, so they're right in order. So that's how you can remember the balance sheet formula. Assets 1,000 equals the 2,000 numbers plus the 3,000 numbers. It should balance. Then you know that's your balance sheet. Earlier, we talked about cash collection voucher. If a soldier loses the gear, they have to go in, pay for that item. Yeah, go ahead before I ask the other question. Go ahead with your question.
It's just for clarification, when you mention the balance sheet formula, assets equals liabilities plus net position, is that the same as proprietary accounting?
Yes. Yes.
Thank
So the balance sheet on the statement of net cost falls under proprietary or financial accounting. So under budgetary accounting, that's the resources equal status of the resources. Then the balance sheet and the statement of net cost falls under proprietary or financial accounting. So then what do we, what's under the managerial cost accounting? What are we concerned about there? Managerial cost accounting, what are we concerned about there? That is those ratios, right? Remember those ratios? So current ratio versus quick ratio. So you think about it as a managerial cost accounting. As a manager, is you got to look at the overall impact of your organization. Current ratio says, what is my ability to pay my bills? What's coming in, what's going out? So I look at my total assets, cash, accounts receivable, inventory. I divide it by my current liabilities, what I owe. And so current ratio under managerial cost accounting is giving me a picture of my ability to meet my obligations and pay my bill. Versus the quick ratio that does not include inventory. It's only all the money that's coming in, no inventory, divided by current liability, meaning you have to go out of business. What is my solvency rate, right? Is that what it says? Asset test ratio, immediate solvency. How quickly can I liquidate everything, get my money, sell my business? So solvency, so quick ratio, asset test ratio is the same thing. So a 1-to-1, meaning my assets will pay my bills, I break even, I can liquidate quickly. Current ratio, the goal is 2-to-1 because I want to have more money and less going out. So 2-to-1 is the best. What are the phases of an audit? What are the phases of an audit? Phase 1 is you got to put a plan in place, right? Planning. You got to figure out what's the objective. You're not going to be able to look at everything if you're going out to do an audit. We do staff assistance visits. When you do a staff assistance visit, that means you're going for a particular purpose to look at a particular process in that organization. You got to have some focus already before you get there to the audit. So plan. Let me see what it says, because I think they list 3. And I got 4.
Plan, review, and report.
Got it. Right. All right, so what if I tell you there are 4 phases of an audit? Even if it's not in the book in front of you, because you only got plan, review, and report in the book. But what if I say there are 4 phases of an audit? What would you think the other phase will be? The first phase will be? And I'm saying that because I have had people come back and be like, yeah, it said 4 phases, but the book says 3. So that's why I want to cover that piece of it.
Is it like internal control?
Outstanding. Internal control, because don't forget, you should be doing your internal control consistently. Every year, I know we got to turn in our statement of assurance. So that says that I'm doing my internal controls, every process is in place, check. So you're turning in a report as being Department of Defense. So you should be doing your internal control. And then when an audit, which is an external organization coming in to do an audit, and they start planning the audit, phase 1 is you're doing your internal control. So let's not separate them, where even if it throws you, you'd be like, no, the book says there's only 3. Don't forget that it starts off with you doing your internal control, just in case. What is the law that says we have to have auditable financial systems? There was a law that came out in the late 90s that says, in the early 90s rather, the 90s, that says we have to have auditable financial system. What is that law? I gave y'all a hint, early 1990. The 1990 Chief Financial Officers Act, CFO Act. You got to do financial audits. You have to have a chief financial officer, a CFO. All of those things. And then later on, that 1990 law was expanded in 1994 by the Government Management Reform Act, where they added and required the 24 CFO agencies to have the auditable financial system. So this 1990 CFO Act started it, and then 1994, they made it more specific for those financial auditable statements. What is, or who has the largest organization in the world? The largest organization in the world is
DOD.
the Department of Defense. Yes, ma'am. Yeah, and if you all you gotta do is think about the budget, how the budget is broken down. Even if your tunnel vision, that's why everything they're looking at the United States. Everybody's always looking, okay, United States, you do something about what's going on over in this country and that country, right? Because we have the largest organization, just our defense alone. What are the different types of opinions in an audit? At the end, once the audit is completed, what are the different types of opinion? Looking for something, NF.
A modified opinion where there's no deficiencies found. Modified opinion where there's one or deficiency found, and then I think adverse, but I'm not sure.
Okay, I just seen it too. Yeah, I have a term written down. I'm trying to see if I find it in here. Yes, yeah, unmodified, which is the best. Modification, mean you have some exceptions. Disclaimer, so there's 4 of them, 4 opinions. Disclaimer, unable to render an audit opinion, and adverse. Material misstatement of fact and failure to follow the generally accepted auditing principles, the GAAP. You're not following any of the principles. So unmodified, modified, disclaimer, adverse. There are 4 opinions on the reporting statement of an audit. What I'm looking for, because somebody send me this word I need to look up for the audit, but it's conducting audits, DOD, NFR, notice the request funding requirement. NFR, notice for recommendation. So somehow, and I don't see it in the book, when the auditors, after they do their review, they give you their findings, they typically give you a recommendation. And so next to recommendation, write this word, and you may have to Google it because I don't find it in the book.
Oh, it's notice of finding and recommendation, NFR.
NFR, notice of finding
and recommendation.
Okay. So I've had multiple people tell me notice of findings and recommendation. And that's basically them telling you, if I'm not mistaken, because from those words, it's telling me that they tell you what they found, and now they're going to give you ways to correct the deficiency. Is that your understanding of it?
Yeah, they tell you the finding and then list the condition and then the cause of it and cite, the regulation that they should be following and the very vague recommendation.
Okay, so that'll be like in the audit report at the end.
Yes.
Okay. All right, so let's see. All right, so let me see, we've gone through most all of that. And for my module 3 notes, I have, make sure you go back to module 2.1.70. It talks a little bit more about working capital fund. Make sure you kind of review that because it'll help you with this exam. Because for some people, depend on the version of the exam that you get, you may have multiple questions. This particular individual had multiple questions on working capital fund. So they refer, if you want more information on the working capital funds, look in module 2. I don't know how old this is. It says 2.1.70, but you're looking for working capital funds. And actually, let me see. Make sure I'm giving you the correct 2. Any question on anything I've covered? Let's see. Yep. So module 2 has 1, 2, 3, 4, 5, 5 pages on working capital fund, where I think if you look at module 3 alone, it was only like a page or a half a page. So that's why I say you always got to look at the other modules to see if you have the same topic, and it gives you more information in those pages. Module 3 recap. What are invitational travel orders? Are y'all familiar with that?
When somebody's visiting your command from somewhere else.
Okay. And that somebody is typically somebody that's already either could be placed in the DTS and you're paying for their travel. So you could put in an ITO, invitational travel order. Let's see, purchase of points, by cost. Most of these I've already asked. What is a premium pay under the civilian pay? So that's probably finance. Let's see. Premium pay. And if you're a civilian, which I am, I should know. I think your premium pay is like overtime. I want to find it in the book though, so give me a sec.
It says overtime, night pay, holiday pay, Sunday pay.
Yeah, it's that list. You have the page in front of you?
I don't, sorry.
Premium pay starts off on page 17, 3217. It got certification, work hours, and then premium pay. Payments, travel claim, payment, permanent duty. Yeah, I just had it as a note to make sure I listed, so. All right. Establishing control of the employee pay, leave without pay. Premium pay, yeah, overtime pay may not be waived. Actually, that's all they list.
It's on 3217, just like you said.
Okay,
3217
yeah,
at the bottom.
Got it. That's what I was looking at, premium pay, because, yeah, highlighted. Overtime, so basically it's just talking about overtime. And civilians get paid, how many pay periods do we get a year?
26.
26 pay period for the 52 weeks. Pay periods, 52 weeks. All right. The Family Friendly Leave Act, how many hours does a civilian get of sick leave to take care of a family member? Family Friendly Leave Act. You get 104 on page 18, 3218. That's 104 hours of sick leave that you can take. I don't think you get paid. May use up to 104 hours of your sick leave, even if the employee's not sick, to take care of somebody else. Questionable travel. I got something on travel orders. Let me just see. The book talks about it. Questionable travel orders are submitted to what committee? And I think I found it on page 3221. 3221. The second to last paragraph. Questionable travel out claims are those where the certifying officer believes to be illegal or improper. If the amount is less than $250, the certifying officer can request an advance decision from the DoD General Counsel, who may refer the request to DFAS General Counsel. Requests for amounts over $250 require advance decision by the Defense Department Office of Hearing and Appeals for DoD civilian employees. So if it's over 250, it goes to the hearing and appeals departments. All right, so let me highlight that. So that's on my sheet. What's a spoiled check? Spoiled check.
It's like a damage check.
Damage, right? You spill, so you get a government check, and before you can cash it or take a picture of it to deposit it, you spilled coffee, you spilled tea on it. Then it's damaged. You can't, nobody's gonna take it, or it becomes non-negotiable. So does that mean I lose out? Because I spilled something on the check? What are my ramifications? What can I do?
Do you go back to the pay office, and I can't remember if that's DFAS.
So whoever, remember that DSSN we talked about earlier? So whoever sent you the check, it should have the dispersing office on there. You have to go back to that same office. Because remember, they got it in their accountability that, hey, we send out a check to Helen Thomas. It hasn't deposited yet. What's going on? So I can't go to a different office to return a check. I got to find out who exactly sent me the check, send it back to them to let them know it was destroyed or it was spoiled so that they can reissue a new check and cancel that one. Permanent travel. If I'm coming from overseas or corners to corners, who's paying for it? If I'm going from Oconus, that's overseas, to the continental United States, which organization pays for my move?
The gaining?
Is it though?
The gaining, yeah, the gaining unit.
That's the exception. If you're going from conus to conus, and I think, make sure I'm reading it right, on page 3222 at the bottom of that first paragraph. All costs associated with civilian permanent travel move are normally charged to the gaining activity. Exceptions to the rule that the gaining activity pays are between agencies or DoD components, and the second one says within the same component for RIFs, base realignment, moves from Oconus to Conus and from Oconus to Hawaii. If it says that it's an exception to the gaining unit normally paying, that tells me that the losing organization pays. Does anyone see that any differently? Because I don't want to, and this again is not military. This is specific to civilian moves. So, but this is saying civilian moves from Oconus to Conus, then the losing organization pays to send you back. Does anyone disagree with that? And that's for my, again, interpretation of that paragraph. Dorado, what do you think? Because I like to say, I know it all, and I don't.
Which it's a little bit confusing, I think, because it says between the agencies and components and within the same component. What about the same component? It's
But
I
for
don't know.
those conditions, so within the same DoD component, so that's to me like Army, you're going to another Army organization. So I think if it's specific to that, so I guess if you're outside of the same component and you're going to a different component, then I'm guessing that's the gaining pays. So that's why you kind of have to interpret these things. But based on this, if you're within the same, if you're Army, Oconus, and you're going to an Army job, CONUS, then the losing organization pays. And like you said, the difference will be if you're going from Army and you're leaving the Army to go to a Navy job, CONUS, then the gaining page based on this interpretation. So I wouldn't get too hung up on it. What is the deposit ticket number in the finance section? When you deposit money into the treasury, what is the deposit ticket number? I used to know these things by heart. And that's on page 3242. In this particular section, some of these you got to know. So deposit ticket is an SF-215. Is when we're deployed and we actually deal with cash, then we have to do a SF-215 deposit ticket to send the money up to the treasury. So you have different reports that is done in the dispersing. So review that page 42 and 43 to understand. And then at the bottom of 43, that last line, remember earlier we said civilian payroll documents are kept for 56 years. Then here they added something about 10 years. Let's see what it says. Copies of vouchers, the books, the records, and other associated papers must be retained as government property readily accessible to the dispersing officer for a period not less than 10 years. So payroll is 56, but all the other finance documents are kept for up to 10 years. All right, let's see. Is your auditor. What are the audit standards? So we talked about the phases of an audit, but what are the audit standards? Auditor and competence. What else? Auditor independence, auditor professional judgment, quality control and assurance. Does audit organizations get audited? Does an audit organization get audited also? How often?
Yes, a peer review. And is it every 5 years?
Is it 5? Lower. Every,
3
how
years?
often? Every 3 years. Yes, ma'am. So peer reviews are done every 3 years. All right. And auditor competency, they got to be trained. So what are their training requirements? So generally accepted government auditing standards says an auditor must complete 80 hours of CPEs every 2 years with a minimum of 20 completed in 1 year of the 2-year period. So just like when you get your CDFM, you're gonna have CETs that you have to complete within 2 years, 80 hours. And within 1 year, within that 2-year period, you have to do at least 20 hours in a 1 year and the remainder. You can't just do all 80 in 1 year and be like, okay, I'm done. Kind of like what we do the DOD FM cert. Like if I went to a class and the class covers all 80, I'm done for this year. No. And the CDFM on top of that 80 that you did for last year, you still got to do some additional hours because you have to do training every year of that certification period. Does that make sense to y'all? Because I see it on the FM cert side, the DOD FM cert side, like some people, they can go to a training and that one training can satisfy the whole 80 hours and you're done. Like, okay, I'm done for 2 years. On the CDFM side, to do it properly, and again, it's an honor system, but if you get audited, you're supposed to do at least 20 hours in that particular year, in a year. What are the types of audit? There are different types of audit. What are they? There are 3 types of audit. What are the 3 types of audit?
Financial.
Financial, okay, that's one. What's the other 2?
Performance.
Performance, and what's the 3rd? Attestation engagements. Those are 3 different types. So attestation engagement just means that you, the agency had requested an audit organization to look at a particular function in your organization to give you a better understanding of where your company lies. Financial audit, I'm looking at your financial statements. Performance is your process, your SOP, how you do things. Do you have SOPs? What are the 5 audit groups within the DoD? I repeat, what are the 5 audit groups within the Department of Defense? So that's the DoD Inspector General, the Army Audit Agency, the Naval Audit Agency, Air Force Audit Agency, and the Defense Contract Audit Agency. Contract Audit Agency. So in the study guide, they have the 4 on one page, and then you have to go to the 2 pages forward to see the 5th one, which is DCAA. All right, I think we have covered all the key points. We talk about that. Monetary benefits versus non-monetary. Go to page 3428. Because again, back with audit, I'm not sure if this was the question the individual was referring to. Because we talked about that notice for recommendation, what is it? Findings and recommendation. So NFR, so on page 3428, that second to last paragraph, I guess, it says an auditor's recommendation is often considered a 5th element. So it's either that, internal controls, because you got, let's see, plan, review, report. You got internal control in the beginning and part of the report. So I'm not sure what it means, that 5th element. It could be a part of the package, but just make sure you read through that piece again, because I got that highlighted. All right, it looks like I have covered all the key areas and I'm right on point. It is 1 p.m. Eastern Standard Time. What are your questions as it pertains to anything CDFM Module 3 related, or CDFM period? Because all of this stuff overlaps. Any questions? All right, I don't hear any questions. So after this session is going to be a few weeks. So I'll be on leave next week, and then I think we have a 2-week break. So if you have any question, you're welcome to still email me. You're welcome to reach out to me on Facebook if you're on the Facebook group. I'll still be checking those. And that's all I have. You can ask questions. You don't have to wait until the next session. Go ahead and schedule to take your Module 3 exam. So zoom in into the information, go over the pointers that I discussed, repetitive, so that when you get in the test, you don't have the book in front of you, because you've looked at it so many times, you've listened to me so many times, you've listened to yourself so many times, and long as you can't break up those in the key players, where do they go in that puzzle? Because if you're still saying that GAO is on the executive branch, then you're not there yet, because you got to be able to take that big picture, because you're really at above DOD level when you come to this exam. All right, so that's all I have. Last minute, any more questions? Ms. Knight, I see you coming off mute. So did you have something?
Oh, no, I wasn't coming off. Thank you, though.
Okay, all righty. All right, this is Helen Thomas on the CDFM study group. If you have not already subscribed to our YouTube page, please go ahead and subscribe to allow the YouTube platform to advertise our YouTube page to more and more individuals. Thank you for stopping by. This is Helen Thomas and the CDFM study group. I'll see you guys again next time. Thank you.